Welcome to today's market report. European stock markets were broadly lower on Monday, weighed on plans for further lockdowns to combat the third wave of COVID-19 cases, while Turkish stocks and the lira were hit hard after an abrupt change of central bank governor. DAX in Germany traded 0.1% higher, CAG 40 fell 0.6%, FTSE 100 dropped 0.4%. Germany is the latest European country to consider extending restrictive measures, with a draft proposal calling for the current lockdown to be extended into a fifth month. The number of new COVID-19 cases has surged since restrictions were eased 3 weeks ago. France, Europe's second largest economy, announced new restrictive measures late last week, resulting in a month-long lockdown in 16 areas of the country, including Paris. Adding to the worries, confidence in the safety of AstraZeneca's vaccine has taken a big hit in Spain, Germany, France and Italy, according to YouGov survey published on Monday, after these countries briefly stopped using it on reports of rare blood clots. The European Medicines Agency regulator said in a preliminary safety review on Thursday that the vaccine was safe and effective, while AstraZeneca has also released data from its US trial showing that its vaccine was 79% effective on preventing the disease and 100% successful in preventing hospitalization and death across a sample of 30,000 volunteers. Its stock rose 0.9% on Monday. Turkey is also in focus following President Erdogan's surprise decision over the weekend to replace the hawkish central bank governor Naci Agbal with Sahap Kavcioglu. The move came 2 days after a sharp rate hike aimed at controlling inflation near 16% and supporting the lira, and has since seen the Turkish currency weaken almost 12% against the dollar, the sharpest move since August 2018. Turkey's benchmark stock index, the BIST 100, fell more than 5% in early trading on Monday, while European banks exposed to the country weakened, in particular Spain's BBVA, which dropped over 6%. Travel stocks also suffered on the potential of another German lockdown, with TUI, Lufthansa, Ryanair, easyJet and ICAG, the owner of British Airways, all down between 4.5% and 6.5%. Mining stocks also slipped after new anti-pollution measures in China sent iron ore futures tumbling, with Rio Tinto hardest hit, down 1.4%. Suez stock climbed 1.1% after investment funds Ardian and Global Infrastructure Partners offered 11.9 billion euros for parts of its business. Kingfisher stock climbed 3.3% after the home improvement retailer reported a sharp rise in profits as customers improved their houses during the lockdowns. Oil prices edged lower on Monday, continuing the recent sell-off as the fresh lockdowns in Europe increased worries about the speed of recovery of global demand for the commodity. Crude futures traded 0.5% lower at $61.11 per barrel. Brent contract fell 0.4% to $64.28 per barrel. Both contracts fell by more than 6% last week. Gold futures fell 0.7% to $1,729.10 per ounce. On the FX front, GBP/USD has been recovering as the US yields retreat from their highs. The pound is set to resist dollar storm on vaccine milestone and improving technicals, with the cable setting higher highs. The UK's rapid immunisation campaign is having a material effect in pushing death rates down and sterling up, allowing it to weather dollar strength. Vaccines allow Britain's gradual reopening to proceed with confidence, especially after the country reached 50% of all adults. The downside comes due to clashes with the EU over imports and exports of doses. Brussels has threatened to block shipments, and UK Prime Minister Boris Johnson will reportedly call leaders on the continent to calm things down. The next moves for the greenback are also set to come from the Federal Reserve. Chairman Jerome Powell will deliver a speech on Monday, the first out of 3 public appearances in which he will likely reiterate his message of ongoing support and dismissal of inflation concerns. Bond auctions due out later in the week are also eyed. The cable has been setting higher lows since it hit a low of 137.75 in early March. This is a bullish sign that counters downside momentum on the 4-hour chart. The euro managed to reverse the initial pessimism and now lifts euro-dollar back to the 119 region. However, the buying interest surrounding the dollar stays well and sound and keeps weighing on the pair, with the dollar index up 0.1% at 92.047. This is today's market news. Thanks for listening. We'll see you next time.